Hey everyone, thanks for joining. This is CryptoVatsik. Nothing of what you're about to see is considered financial advice and they're just my opinions. If you do enjoy this content, I would really appreciate it if you gave the video a like and don't forget to subscribe to the channel for future updates. Let's go. Okay, today's TA video is going to cover Aave USDT or Aave, whatever you prefer. I've heard people say Aave before. Maybe I'm crazy, but whatever you prefer, I'm going to call it Aave. So we're on the 1-day chart here on Binance, and first thing we're going to do is we're going to flip to the logarithmic chart. And we're going to go ahead and draw that macro descending channel that I'm seeing. Because there's lots of interaction with this channel, and I think it gives some good context, and you can see right where we're at right now, so it just gives a clearer picture. You can see we're hovering right around the equilibrium of this channel. We tapped it right here with this previous low that we had, and meanwhile, lots of interaction as resistance, as support, and you'll notice even within these 50th percentiles of the ranges, there's also lots of interaction with the quarters of the range, so to speak. Okay, so really interesting to see. I think it's just going to give good perspective on what's going to happen next. Now, the next thing I'm going to do is I'm going to mark out that area of support. Okay, so resistance, flipped it into support here, okay, and then obviously our macro low back in June here as well, and now we've tapped it again. So let's go ahead and make that green. So currently that's our macro time frame support, and then now we're going to look at current macro resistance. Okay, so again, just same thing, but right up in this level near the range high, we'll make it red, is our current macro support, resistance at that level, right around $70, $71, $72 area. Now, since we're trading in the upper half of this channel, I'm going to drag that guy right up there to give us a clear picture. Okay, so now let's zoom in to let's get our order blocks first on the daily. High time frame, daily, bearish and bullish order blocks. Okay, so our first order block here is going to be the bullish order block. This red candle, make it green, invalidated by this up candle, okay? Break of market structure. That's our bullish order block, currently retesting it. And then currently our bearish order block right there that will make red. Okay, down candle invalidated this last up candle that broke market structure, bearish order block right there at that level. And it lines up very nicely actually with our monthly open right here. Make that a little thicker. Right there, monthly open at $65 and change. So before we zoom into the 12-hour here, lower time frame, there's just some things to cover, right? So obviously we've got the equilibrium of this downward trend, this downward channel, okay? Obviously acting as resistance currently. Meanwhile, we had a beautiful retest of the lower band of the range or the channel with this wick down here, which was nice to see. And huge volume on this candle as well, so obviously demand down in that area. Now, if you're a bull, obviously you would like to see a flip of the EQ and a reclaim of the monthly open if you want to trade this to the upside. But currently it's fighting this trend and it looks like it might want to come down a little bit lower. So to find your entries and to really drill into the lower time frame, you got to switch down to some lower time frames such as the 12-hour right now that we'll get into. So you can see still acting as resistance is the equilibrium of this downward channel, okay? So a couple fights to try and get out of it, deviation here. However, just acting as resistance right now with a bearish retest in my opinion. We are retesting some liquidity and demand right here within this bullish order block that we marked out on the daily. Okay, so we are coming in, we're trying to hold this low. We did break market structure of this temporary trend, okay? So we broke that market structure now. With the retest and it's coming down. So I'm sure there's a fair amount of people now looking at this break in market structure looking to short this current level where we are as we push into the bearish order block on the daily marked out by that zone there. Okay, so be careful in this area. And part of the reason why we had this nice move up is because we had this bullish divergence down here on RSI, printed some bullish divergence with RSI making a higher. Let's just bring it up here. Okay, so we made lower lows on price. Meanwhile, we made higher low on RSI. Okay, so we had that nice bullish divergence with a beautiful spring and nice reaction right here. Okay, this is our spring right here. Lots of demand down there, immediate reaction, pushing to the upside. And then what we got is we actually got bearish divergence right here on these wicks that I was noticing, really fighting to get out of this this equilibrium downward of the channel, this guy right here. Okay, so with tap right there, almost tap here, so just basically a couple SFPs and then rejected ultimately. So, though that we had a nice reaction here off of this bullish divergence and push to the upside, there was really still no trend. It's ultimately still just a ranging asset, right, within this overall range that will mark. I know the chart's getting busy now, but we have range high up here, okay, and maybe you want to take it actually to the high up here now with a little bit of wiggle room over here. Okay, equilibrium, lots of interaction at the equilibrium, almost a retest of it here down to the low. So ultimately still just ranging inside of this minor range. Okay, in the 12-hour, I wouldn't call it minor, we're still on somewhat high time frame, but still really just getting not a lot of opportunity to jump onto any kind of trend at this moment. It's starting to get a little busy, so let's just go ahead and clean up the chart. Now, this is not an easy chart to trade, but if you are trying to trade it, this is kind of how I would play it. So let's take the fib here from the high down to the low on this overall move here, okay? And you can essentially also think of this as just that range that we had previously as well. Basically, from the top here down to the low, okay? Go down to the wick there. And ultimately, coming down, to the equilibrium in here, and we can draw. You can take it from the candle close, okay, and the candle open here, or you can take it down to the wick. It's really a personal preference, but either way, we are coming back down towards this equilibrium, okay. And so when you start to look at the fibs, you can see that clearly we're retesting the 382 right now at this point. So if you're bullish, you want to see the 382 hold. You want to see this low hold at this point. Just get rid of it. So you want to see this low hold, okay, and you'd be targeting the upper band of the range up here. But ultimately, I'd be really looking for a breakout of this upper band here to really get out of this overall downward structure, and then potentially this is our retracement right here, shallow retracement. Not usually. Usually we see the 618 as a typical area of retracement, but in a strong trend, we'll see sometimes the 382. But this isn't, in my opinion, a strong trend. And just given the fact that we have broken this upward trend here, that leads me to believe that we've obviously broken market structure. So I'd be personally looking more for shorts on a retest of this origin of the breakdown here. So you come up, maybe a deviate below, and then you get a market structure on the lower time frame, looking to short in this area, probably on the 4-hour. I'd be looking for that. You can zoom in a second, and then coming back down, to that equilibrium or potentially the 618 area. And all this is doing is really just coming up and sweeping liquidity up here, okay, getting rejected, and then ultimately coming back down and sweeping liquidity down here with this low. Okay, so we've now swept that low. So you want to see this area hold if you're bullish. Now, what it really comes down to is what it's going to do on the lower time frame. So this is how you want to try and find your entry on a trade, whether you're shorting it or you're going long. Okay, so let's now go to the 4-hour here. So there's an SR level here that we've currently just flipped, okay? So you can see it right here in red, okay? That is currently resistance that we've now lost, okay? So we had it as resistance over here, okay? And then support many times throughout this area until it was lost, rejected here, and then now potentially getting rejected currently. And I'm pretty sure this area lines up pretty close to the monthly open right here that we discussed, right around $63, okay? I'm pretty sure. One that we marked out on the daily earlier. So essentially I want to see that reclaimed, but I wouldn't be entering here, and I probably wouldn't even enter on a reclaim like that because there's just the R&R isn't that great. So I'd be personally looking for this market structure break that we had here, a retest of that, okay, with your stop loss below this low, and then you'd be targeting the high up here. But I'd only be taking the trade if I had good R&R, and so the reason why I say I prefer to get in on a retest of this bullish order block or a retest of the market structure break. We had this lower high, now our high. Okay, so if you can get in down here, your R&R is just much better because your stop loss is going below this low, right? So your stop loss can be 2% kind of thing. So let's just mark that out. So if you got in here and you're targeting the high, the range high, stop loss below the low, your R&R is 4.62, okay? But if you are getting in on this level up here, your stop loss going below the low, and you're still targeting the high, your R&R goes much further down, 1.25. So sometimes the best thing you can do is just wait for the opportunity to take a trade, to enter. If there's no trade, then I just wouldn't take it. Without a clear invalidation, in my opinion, there's no trade. You need to know when you're wrong, right? And you're clearly wrong below this low, right? If we come below this low, then it's clearly, probably at the least testing this EQ. But if we lose this low, I'd expect us to come back down to the range low, losing this overall equilibrium. So if you say to yourself, no, this is the trend, this is going to the high right now, and you enter somewhere in here in a small retest, it could chop around in here and deviate and then come back down, and then, you get chopped up, then it comes up. So you just really got to manage your risk that way. Setting limit orders for these areas down here with your stop loss down below, gives you that better R&R, whereas if you're just buying at market, the risk is higher, in my opinion, and or you have to be sitting at your computer so you don't miss the move. Because lots of times, if you do wait for that confirmation, you'll have typically missed the move. So you'll see it up here, and it's already had that confirmation check kind of thing, and then you'd be sitting on your computer, basically waiting for that retest to go long. Whereas if you set that limit order, you can step away from the computer a bit more. I'd also be fine if it doesn't have an immediate reaction. If we start to chop around in this area here with a little bit of consolidation, I'd be okay entering on any of these retests, again with the stop loss below the current low, because it could be powering up for a breakout and a push upside. So, something like this wouldn't be a terrible structure for me as well, because at this point we have swept this low here, right? So we've swept, terrible drawing. We've swept this low here. We've come into that liquidity zone, so we need this low to hold. So that's right now my clear invalidation level. But again, like I said, with this structure currently, my bias would be to the downside, and ultimately looking for a sweep of this high. So let's zoom into the 1 hour. Okay, so right now sweep. So it's a nice push, right? Okay, we've come up into liquidity. We've actually deviated above it a bit. So this is that origin of that breakdown level right here, okay, with this big, large candle. So, if we come up something like this, and then we have that break in market structure, be looking to short on the bearish retest. And that's why it takes patience, because when you see this drop here, you think you've missed the move, and then you get some bearish consolidation in here kind of thing. So, that's why I mean when I say you got to wait for that confirmation, so to speak. If you're entering in here, there's no market structure break yet, so you have less data to work with, and then ultimately your stop loss is going above the next high, so your R&R again wouldn't be as ideal. Whereas if you get in on this bearish retest here, your stop loss can go above the previous high, a little bit tighter, more optimal R&R. But again, then I would expect us to come back down, probably do some more chopping, right? So again, you're just trading ultimately what is a ranging asset versus a trend, so a bit tougher to trade. It's just ultimately sweeping liquidity zones, up down to demand and up to supply. So really just fighting to flip those support and resistance areas. So I think that's pretty much all I wanted to cover. Sorry if I was going quickly and it was difficult to keep up. I just try to fit everything into 15 minutes in these videos and keep it to the point for you. But I hope that you found something in this video that helps your trading and, helps if you're interested in Aave, whatever. If it helped you in some way, I would really appreciate it if you gave the video a like. And thanks so much for joining. Don't forget to subscribe to the channel, and you can also follow me on Twitter at CryptoVatsik as well for other frequent updates. Thanks again for joining, and we'll see you next time.